It's my pleasure to introduce to you Matt, our next speaker, Matt Lilley from Prudential plc. As you've heard, Prudential is the UK's largest life insurer, and they do a lot of work in other parts of the world as well, and have been growing quite rapidly over the past 25 years. Last year, Prudential moved into the direct life insurance business in Africa when it bought a business in Ghana. As CEO of Prudential's Africa business, Matt is responsible for overseeing the company's expansion on the continent. He has been with the company for 5 years, and during which time he has learned a lot about working in emerging markets and of doing business in Africa. So I'd like to welcome Matt Lilley.
Thanks, Martin. Well, I'd first like to start by saying how nice it is to be in Cambridge. I spent 7 very happy years as a student here, and it always brings back happy memories of my youth to return. The theme, apparently, of this little talk is barriers to success, and you know, if there's one message that we think defines the barriers to success, and that is cut through the noise and focus on the long term. There's a lot of noise about Africa in the media. I'm sure you all remember in 2000 The Economist ran a cover declaring Africa the hopeless continent. Well, that's been proved very, very wrong. Africa's economy has trebled in size in the last 12 years. And half of the countries in the continent are now middle-income countries. More recently, there's been a flurry of headlines, as you know, talking about Africa rising and African lions. Christine Lagarde, the head of the IMF, was telling the FT, I think just last month, that Africa rising is the good news part of the message, and now Africa is watching. We think at Prudential that Africa is likely to have very strong economic development over the next 20 years, mirroring what's happened in Asia over the last couple of decades. This will present enormous business opportunities in almost every sector, and companies need to be thinking about them now and not waiting. Of course, that being said, not everything is or will be rosy in Africa. Doing business isn't always easy. Anybody who's tried to get from one end of Nairobi, Lagos, or Accra to the other in a hurry will know that simple things like traffic are an immense block on productivity in the economy. But I'll talk a bit more now about what we think are the ways to overcome some of these barriers to success. I think the most important thing to stress up front is that not necessarily the key to success, but the key to failure is the company's own attitude. Companies trying to make money quickly, unwilling to take risks, impatient, will find the barriers insurmountable. But companies with the patience and the nerve to take a long-term approach, we think there are potential for great rewards to be made in Africa over the next 10 or 15 years. At Prudential, as a life insurance company with over 165 years of experience, we're used to taking our time. To give you an example from Asia, and this won't be the last example from Asia, in 1995, we opened a business in Indonesia. 2 years later, it was one of the hardest hit countries in the Asian financial crisis. The government had to ask the IMF for a $40 billion bailout. And in '98, the GDP growth was minus 14%. There was rioting in the streets. Suharto had to step down after 30 years in power. And a lot of multinationals scaled back their operations, stopped investing, pulled their people out. For us, though, the long-term fundamentals, the reason we were there, hadn't changed. We continued to invest in the business. And today we've got 200,000 agents selling life insurance for us. 2 million customers in Indonesia. We make $300 million of profit. And in the past 15 years, since the financial crisis, our sales in Indonesia have increased by a factor of 500. Emerging markets are more volatile than developed markets. By nature, they tend to be more vulnerable to short-term economic shocks, to political instability, and to currency fluctuations. To build a sustainable business, though, you need to have the patience and the confidence to bet on longer-term trends. Today, we're reaping the rewards of this approach across our markets in Southeast Asia. And last year, our Asian business made over $2 billion in profit. So why are we so keen to invest in Africa? Well, quite simply from a shareholder's perspective. We think that Africa can be the new Asia, both for us as a company and for the global economy. What matters in a long-term business like ours are the economic fundamentals. And many African countries have very similar fundamentals to those we saw in Southeast Asia, poised to undergo the same transformation driven by demographics. Africa's population is growing, as you know. In 20 years, there'll be more people in sub-Saharan Africa than in China. And by the end of this century, the UN predicts there'll be 4 times as many Africans as Chinese. With a median age of just 18, Africa's population is also young. And young people, like me and many of you, are an important source of energy, innovation and productivity for economies. Africa is the only part of the world where the population of young people is set to keep growing. Over the next 35 years, more than 250 million Africans will come of working age. If enough jobs can be created, pause on that, if enough jobs can be created for these young people, the continent will benefit from an enormous economic demographic dividend. Africa is also urbanizing more rapidly than any other region. In 2010, about 1 in 3 Africans lived in towns and cities. By the end of this decade, perhaps half of Africans will. This is compounding the demographic opportunity because urban dwellers generally have better life chances, better access to health services, education and jobs, and so are more productive. Africa has a large emerging middle class. 1 in 3 Africans is middle class now. By 2060, there'll be more than 1 billion middle-class Africans. That's more than the combined population of the US and the European Union. This represents a huge business opportunity. As people's incomes grow, they have more money to spend on goods and services. It also means people have more money to save and invest for their families' futures. Ghana's gross national savings rate is already higher than that of France. That represents an opportunity for companies like ours that provide savings protection products. It also means that governments will have more domestic capital to invest in things like healthcare, education, and infrastructure, creating a virtuous circle of growing prosperity. People across Africa are increasingly confident about their own future. 90% of the African consumers in a recent survey by BCG said they were optimistic about the future. That compares to a global average of 50%. As you know, investors are also excited about Africa as well. The most recent African Economic Outlook from the World Bank said that sub-Saharan Africa will attract $85 billion of foreign direct investments this year. That's the highest ever level. For all these reasons, Africa's got the potential to become a major engine of global economic growth in the coming decades. But it will only achieve this potential if it overcomes some important barriers. Poor infrastructure, as we've remarked a number of times, is a major constraint. Only 4% of African GDP is invested in infrastructure at the moment, compared to 14% in China. That shortfall is estimated to weaken GDP growth by up to 2% a year across Africa. And when that's compounded over decades, that's a significant reduction in the living standards of African people. Companies and producers using ports in Africa as a gateway to world markets face the world's longest delays in delivery. Transit typically takes 15 to 20 days, compared with 3 in East Asia. Physical security has the potential to become a barrier to growth. In some countries, Nigeria and Kenya are 2 obvious examples. And of all the risks that you've heard people talk about, this is the one that worries us the most. Access to finance is another major issue. Close to 80% of the adult population of Africa is unbanked. And this matters because without access to credit, the continent's many SMEs can't expand and create jobs. About 80% of African firms have expressed a desire to borrow money. Only 5% have loans outstanding. Insurance penetration, my business, across sub-Saharan Africa, excluding South Africa, is about 1% compared to about 8% in the UK. Without insurance, growing middle class will lack the ability to save, invest, and secure their families' futures. Insurance is also an important source of the long-term capital needed to develop the infrastructure on which growth is built. If Africa's people are the principal engine of growth, then finance is the oil will enable that engine to run. As I said, any business that wants to succeed needs to take a long-term view. What does this mean in practice? We'll put together a few thoughts based on our experiences both in Africa and in Asia. The first thing is get in early and build relationships. Most insurance markets in Africa at the moment are too small to move our company's bottom line in a material way. But it takes a long time to build a scale business. And we've learned from Asia that we make the best returns where our businesses have scale and credibility before a market reaches that interesting size. And that's why we acquired a business in Ghana last year, and that's why I spend most of my time in Africa, not just looking for other business opportunities, but developing the relationships that will be vital to our future success, whether with governments, regulators, potential partners, or potential employees. Started talking to regulators and ministers in Ghana months before we even identified an acquisition target there, and we're already having conversations with our counterparts in a number of other countries. The second thought is to hold your nerve even when market conditions are bumpy. Companies that are willing to invest year after year have the opportunity to reap great rewards. Those who are spooked by short-term fluctuations will not. As I said, I spent a lot of time in Ghana. At the moment, the Ghanaian economy is struggling. The currency has weakened significantly. And I hear a lot of executives at other companies telling me that they're holding off making investments in Ghana. In my view, that's nuts. And it's the classic symptom of someone who is very unlikely to be successful. You either believe in the long-term prospects of Ghana or you don't. And if you do, now is the time to be investing in the business, putting down the roots that will support business growth in the future. Third, the best way to build a successful business is to make it as local as possible. This means hiring local people, investing in developing them, by bringing in expertise for them to learn from, by sending them to other parts of the world to get experience, by helping talented Africans who've studied abroad or worked abroad to return to good jobs. At Prudential, investing in local people is particularly important because we make most of our sales face-to-face via our agents. That means we create a lot of jobs and we invest in training and developing our people because they are our business. In Asia, we've 400,000 agents, and in less than 6 months, we've already increased the sales force of our Ghanaian business by 1/3. It's not just our agency force either. The entire senior management team and the chairman of the board in our Ghanaian business are Ghanaians. Local people are best placed to understand the needs of their customers and communities. When we decided to develop a corporate responsibility program for Ghana, the first thing we did was to ask our staff for their views on where we should focus our efforts. Fourth, it's not enough to focus on narrow commercial objectives. Companies and business people have a stake in building better and stronger societies. Not only is this an important signal to governments, regulators and customers that you're committed to the market for the long term, but improving the business environment and the economic potential of your market makes good business sense too. We have strong social programs in every country we work in. In Ghana, we sponsored a prize at 2 universities to encourage the study of actuarial sciences. We started a scholarship program for senior high school students that's merit-based to keep kids from challenged backgrounds in high school. Our own CEO in Ghana was the beneficiary of such a program 20 years ago, and we hope that the students that we're sponsoring now will go on to contribute to their families, communities, and the economic growth of their country. It's good for Ghana, it's good for us. The fifth comment, and I wanted to make this on the panel, but I wasn't brave enough. Don't just go for the most obvious markets. Our competitors in Asia focus their Asia strategies on India and China, the biggest markets, the most people, the biggest economies. However, it turns out, 20 years later, that these are very difficult places to make money. We've made much more money in Indonesia, Vietnam, Malaysia, Singapore than in India or China. And we'll soon be more profitable in Thailand and the Philippines than we are in either India or China. Africa is a continent of enormous diversity and geographic size, 54 countries at different stages of development and with different opportunities and challenges. Companies should not be swayed by the sheer size of a market alone, but look at the business environment. In Asia, we found that there was much more to Asia than China and India, and I'm sure that there will be much more to Africa than Nigeria and South Africa. Sixth, be flexible. Don't just assume that Africa will develop in the same way as other parts of the world. In many areas, Africa will be a source of global innovation. Mobile banking is an obvious example. In Kenya, the M-Pesa mobile payment system brought an extra 15 million Kenyans, it's more than a third of the population, into the formal financial system in 5 years. Today, around a quarter of the entire GMP of Kenya flows through that system. There'll be other innovations to come, driven by market need, catalyzed by technology. Companies need to be ready to adapt them. Finally, perhaps the biggest barrier is the confidence of business people themselves. EY's latest investor attractiveness survey shows that sub-Saharan Africa is rated as the most attractive region for investment by companies already doing business there, but it's rated as the least attractive by those who are not. Now, from a selfish perspective, this is great. I don't want to stand here and do my competitors any favor by opening their eyes to things that they haven't seen. But it's not healthy for this country. Our long-term prosperity as a nation relies on us exporting to emerging markets, where there is growth. Africa will be a big driver of emerging market economic growth over the next 20 years, and if we ignore it, we will be poorer. We take immense satisfaction in knowing that we're not just sowing the seeds of Prudential's future success, but also taking part in a historic shift in the world economy. For those of you like me who are young and just starting out, I give you the same advice. We speak at a lot of these conferences, and the flow of talent to Africa is one of the reasons we have such confidence in the future for our business and the economies. People like you are choosing to have a career in Africa for rational economic reasons. And one thing that we've observed very clearly in our business is that over the last 20 years, huge numbers of people have raced up the career ladder by working in Asia. In rapidly growing markets, opportunities come up quicker and you get more responsibility faster. Africa will be just the same. I said already, long-term commitment is the key to success. So you should look to work for companies you believe are really in it for the long term. That means not just the CEO, but the whole organization must be committed to investing through the downs as well as the ups. CEOs move on. If the next one pulls back at the first sign of trouble, you've been wasting your time. To sum up, I would say forget about Africa rising, Africa watching, African lions, but ignore the headlines and get out there and start doing. Whether as an investor, an entrepreneur, or an employee, if you're committed to the long term, you can overcome any barrier. And not only will you be getting a head start in some of the key markets of tomorrow, but you'll be helping to contribute to the biggest human and economic success story over the coming decades. If that doesn't inspire you to do business in Africa, I don't know what will. Thank you.